Hey, Chris. It's Friday.
What's going on, Jay? Happy Friday.
Yeah,
How are we
we
doing
made it.
today? We made it. We made
Made it
it.
through
Everyone,
another week.
we made it through another week. We did. We did. Everyone out there, welcome to the On the Rocks podcast where we talk about accounting and accounting adjacent stuff, mostly as it relates to e-commerce, but not only. As you will have known by now, hopefully, and if not, welcome today. I'm Chris Gino. That's Jay Kimmelman. Actually, that's Jay Kimmelman. Um, and uh, and we are your hosts today. Last week, we talked about managing your supply chain. There was a big accident. It made it really relevant to consider all the things that went around with supply chain management, about valuing your inventory, about considering lead times and everything that goes along with that. This week, we know that the individual tax deadline is right around the corner. By you have less than 2 business weeks, and so this week we're going to talk about taxes. I actually did my tax return earlier this week. I'm pretty sure that I did it right, but I can't imagine how complicated it can be for business owners. So we'll talk about that. We'll talk about deadlines. We'll talk about updates that people need to be aware of. We'll talk about things that you should expect around your taxes, how different forms all kind of connect together. We'll talk about individual taxes and the interplay between that and business taxes and what the differences might be. And we'll talk about some of the problems that accounting professionals have been running into between like client management, between Congress, and also between the IRS, because there are plenty of issues out there. And so we'll talk about all of that stuff, and hopefully in a way that can be really valuable, especially given both Jay and I's perspectives. So we will get to that soon. But first, what happened this week? Obviously, the tax deadline's around the corner, so in a lot of the accounting space, everything is revolving around how many hours are you working this week, and how many tax returns do you still need to get extended, and everything else. Is that consistent with what you've seen, Jay?
Oh, so much. And
Yeah.
in addition, it's how many times did we call the IRS this week?
Yeah,
So,
absolutely.
we'll get into some of that a little bit later, too.
We will. We will. We will.
Yeah.
One other thing that I noticed this week, everyone's favorite, most divisive politician, the media company that he recently put out public, issued their 10K, or issued the SPAC issued their 10K, and that included some very interesting stuff. And one of the things that I saw was that those companies received a going concern opinion, which you don't see very often for big public companies and companies like that. And so I thought it was worth highlighting here of what that means, and what that terminology means, and kind of the stuff around that, because if you saw that happened, and especially if you're in the accounting space, that may be something that's interesting to you. Like, what does it mean? What does a going concern mean?
So
And so,
why did you say you don't see that much? Why do we not see that opinion
yeah, and so I think
much?
that the biggest reason that we don't see that opinion much is that most companies are set up. Most companies that are being audited, are set up in a way that they're likely going to be sustainable, and so they're going to continue to have business. They're going to continue to be growing, and especially public related entities, like lots and lots of those entities have a history or a record of success, um, or a gigantic pile of cash, or or some other kind of funding that's going to allow them to fund their operations for going forward. Being a going concern means that you're a business that's continuing, and a going concern opinion is the auditor saying, we've got some evidence that might not happen, that there's some substantial doubt, is actually what the language says. So there's substantial doubt about this entity's ability to continue as a going concern. So to keep on going, there's substantial doubt about this entity's ability to do that. And that could be really easy, right? They could just have really poor operating results. They could have some really big debt that's up in a couple days, but they haven't refinanced it yet, and they don't really, and they haven't been able to finalize that. And in lots of cases, management can put into place a plan to resolve that issue. And so oftentimes when you see that going concern language, the substantial doubt language, it'll also be accompanied by but it's not going to be that big of a deal if management has success with their plans that are outlined in the notes. The thing that I thought was particularly unique about this one is it didn't include that language, which means that
Right.
either A, management doesn't have a plan, or B, they didn't have time to put together one that was going to be effective. And so anytime you see that language, that substantial doubt language in a company, it doesn't mean that the company is going to fail. It just means they're going to need some things to happen and some things to fall in their way to be able to continue to go as a business. And so you will see that a lot in startup entities, in entities that are just kind of starting to exist, but you don't see it a lot in entities that have been around for a while. So I thought that was interesting. What other questions do you have, Jay?
So in that situation, what's the likelihood an audit firm would resign from the engagement before putting out a going concern opinion?
Oh no, pretty unlikely.
Okay.
So this is not like the adverse ones that I mentioned before, where I actually saw an adverse opinion in the wild. Because an adverse opinion is one that, like, hey, these financials are materially misstated. Like in those situations, you as the audit firm are almost always going to just resign because you're either not getting what you need from management, or you're not getting enough of what you need, or it's just like a disaster to work through. And so you hardly ever see adverse opinions because of that. In this case, this is pretty. I mean, it's a big deal, right? Because the company is you're telling the users of the financial statements is hey, there's some big problems here.
Yeah.
And so that like makes it tense, but it's not an actual problem because the company was around to pay your bills now, right. and the company is still going on. So I've seen plenty of substantial doubt, questions, and mostly around debt, right? When you're financed and your debt's about to come due, and management thinks they might be able to renew it, but they haven't really started, and the bank is kind of hesitant on like committing to something right now. Like you can that happens. Like that can very easily happen.
For sure.
And so yeah, you see this in private entities certainly probably more frequently than in public entities just because of the nature of them. But it isn't like a unicorn like that adverse opinion was. It is.
Gotcha.
It's more of more probably like an African elephant or something. Like there's not a whole lot of them, but they're there. Maybe one level up from that. I don't know, something that's there's not a whole bunch of, but it's not that crazy to see one. Maybe some kind of monkey or something. I don't know. Also, it didn't happen this past week, but I noticed it as I was looking through articles and things. There really does seem to be a whole lot of private equity coming into the accounting space. I know it happened. Was it Grant or somebody? Not Grant, BDO maybe. So who was it that recently brought a private equity firm in? I
don't remember who it was.
Yeah, I don't remember either. But that happened now to a big company, like right. Whoever that was. But it's been happening a lot to accounting firms around the world, even smaller ones, right? And I've noticed that in some conversations that I've had out on Twitter and on X, of that there are people in the small business space that actually have interest in buying into accounting firms. And so I thought it was interesting when I saw it. It piqued my interest again, and because I thought it would be an interesting thing to get your perspective on, Jay. So what do you think about private equity in accounting?
Yeah, I mean, I see it happening all around us as well, and in some cases, I think it's good. In some cases, is it driving, the firms into this revenue model which is unsustainable?
Yeah. What do you mean? Can you describe that some more?
Yeah, you're driving revenue to the point where you can't keep up with the workload, and the staff. It's like tax season every day. 365 days a year, and you just can't keep up, and you're driving morale down, and that's what I've seen and started hearing a little bit about that. But
right,
I mean, everyone has a different method of doing it. If you're trying to scale, well, you scale with technology, with offshore teams, possibly other methods. You can't just take your teams and have them working 80 hours every week. It just doesn't work.
No, it won't. It will work for a short period of time for sure, and it'll look great for that short little window. But once you run into the turnover that is gonna bring, you're gonna start to see some additional kinds of problems for sure.
But talking about that, and I don't know how it's going to work. There's been some talk about making the work week in the U.S. a 4-day work week.
Yeah,
officially, and passing that through Congress. Now, I don't know how that would work in this industry and other industries, but it's just going to push the offshoring even more.
Right. Yeah, definitely.
Yeah, I think you got to get your mail. It's so good. Let it rip.
So the dogs are barking again this week. I actually don't have any idea why. I wasn't expecting anything. My beer drop came yesterday. Actually, that's what I'm drinking today. But yeah, no, I think private equity has there's pros and cons with any type of ownership change.
It's got its place. It definitely does. And you have to look at sustained growth, not massive scaling growth. I think. When you're dealing with the people side of the business. And,
right.
I mean, if you can automate it and build the technology to do all of that work, go for it.
Right. And I think that's one of the good things about private equity too, is oftentimes they like where a single proprietor may have some challenges in bringing in a new technology or knowing what the right technology might even be. When you have these private equity opportunities, you have additional funding, right? That they are able to do that and do that more effectively. It's like they've circled back. It's like the postman came and came again, and is maybe now on his third swing around. My wife isn't here to calm them. She had a big meeting today, so they're just riling themselves up today. Anyway, so I think there are both positives and negatives that come from private equity, and I think that's true just across the board, right? That's not special to accounting. That's just private equity in general, because the motive of the private equity company is to make return and get their money back.
Right.
And so they are inherently going to be focused on overspend or more spend than they would like. And they're going to be focused on additional revenue growth and like doing both of those things at the same time.
And like you said, if you're dealing with a single owner and it's not very technologically advanced, they might be technology adverse and not want to make those investments. Whereas the PE firms, they probably own 3 or 4 tech companies that can do the work for them and help automate it.
That's right. So that may have been the reason why they wanted you.
Right. Exactly. And they're looking at it from a vertical standpoint. You're feeding work to their own companies. So.
That's right. Exactly. Yeah. And so there can be a lot of value in that. And it's not just the capacity, like, so what you're describing, right, is like the non-tech savvy guy who's like, I don't really want to do tech. It's also like some technology, and especially like really good, really robust technology, is expensive, and it can be a pretty significant outlay. And so as a single, proprietor, like that can be a roadblock of its own. But when you have this extra money and the extra backing, like, you have some flexibility with that, and it allows you this opportunity to be able to maybe make like some extra better decisions
for sure
that can push you forward. But I do think that there's no question, like, then the motive probably becomes at least a little bit different, because you go from being maybe client incentivized to being profit incentivized. And so it does change a little bit of the way that the business is going to run, and it would be surprising if it didn't. So it will be interesting to see kind of the next layers of how that happens, or what comes out of that next.
Most definitely.
Because I'm sure there will be good things that I'm hopeful that all accounting firms will adopt, and I'm sure that there will also be bad things, which, if they are not successful, that make a very good example of, like, don't do this.
Right.
And here's the example of why. So
yep, for sure.
So I'm hopeful really for the first one, and maybe we can skip the second one. But if we have to have the bad ones, at least hopefully there are good examples anyway of pushing the industry forward, which I think is very important. I know we still don't have any updates in Congress, and it sounds like from everything that I've read recently related to tax stuff, especially as the deadline approaches, is that it's just not happening. And I think we kind of came to that conclusion last week.
I think so, yeah. I don't see it happening at this point. And this being an election year, I don't see anything happening because nobody wants to... it's the same thing like with the immigration bill. Nobody wants to help this guy. Nobody wants to help that guy. So, we're just going to let it sit, and we'll have to wait till next year. So we have a new Senate, new House, and a new president. And see what happens.
Yeah, we'll see what happens. We will see what happens. What else happened this week, Jay? Anything else that's worth talking about currently?
Well, not really work related, but for me, my Sunday last week, Easter Sunday, NASCAR, they pushed out their race till 7:00, and actually it was raining in Richmond, Virginia, so they actually started about 15 minutes late, and they started late on wet weather tires.
Wow!
And for the first time in a points race, they were running on wet weather tires in the rain, and
that's amazing.
They turned them loose. It was a great first stage of the race. And pit strategy came into play. They went back. They deemed the track dry. They put the slicks back on. They turned them loose. And it was great right up to the very end. And Martin Truex Jr., he's probably close to retiring this year. And he was right there ready to take this victory. He had led like 200-something laps.
Yeah, I saw that he led a lot of laps. He was getting impatient. Like Alex Bowman was trying to keep his lap from going a lap down because regardless he'd get being that last car on the first car lap down, he would have got the pass anyway. But he would have had to start at the back of the longest line. So he was fighting as hard as he could. Well, Martin Truex Jr. wasn't sitting for that. He was bumping him and hitting him, and even at the end of the race, he was hitting him. And when it came down to it, there was a wreck with 2 laps to go. Well, like 6 laps to go. It ended up they had a green-white checkers, and my AirPods were dying. I got to fix that. Oh, yeah. All right.
But what happened was there was a green-white checker, and Denny Hamlin jumped the start.
Oh.
And he ended
that
up
seems like a thing you're not supposed to do. Oh, he won the race even though he jumped the start? Like jumped it, like nailed it. Like good jump.
He jumped it right at the very end.
Yeah.
So it wasn't a major issue, but he got like that far ahead, and it's like it blew up the entire world this week. And, you would have thought that,
he murdered someone out there or something? Yeah, right. Yeah, that's pretty crazy. Maybe I always think I always like to think about what I would do if I were a NASCAR driver and I was in that position. Like I don't know that I'd have the patience to not like put somebody on the wall. But
Agreed.
But I don't know. I know that won't go well in the long term though. But I know that the watching that type of racing can be really, really exciting because of exactly that. You never know exactly what's going to happen.
Yep.
And at the same time, they're going so fast that if especially when you get the in-car views, like the control that it takes to be able to both be the tapper and be the tappee, the control and skill that goes along with that is really, really, really impressive every time.
My God, yeah. I mean, completely.
Yeah.
And, this race ended, and it was like everybody was just pissed at everybody. And, what brought out that last caution, Bubba Wallace wrecked Kyle Larson, and Kyle Larson's sitting there waiting to be interviewed, and Bubba Wallace just came over saying, "Hey, man, I'm so sorry," and gave him a hug.
Yeah.
So, it all ended well. And, we're going to where are we going this week? We're going to Martinsville, another short track.
Oh, no, yeah, there you go. Another fun one.
It's going to be hairy. And if there are any ill will, any bad feelings at this point, we're going to see it this week.
Yeah, that's good. This is going to be a good one.
I'm looking so forward to this weekend. And this was the first short track I ever went to at Martinsville. And Yeah, long story there. We'll get into that some other day, but
Yeah.
I love that track. So
Yeah, those short tracks are always fun because it doesn't take very long for you to be just right on top of the rest of the traffic.
yep,
And then that just makes everybody equal.
yep, for sure.
So those are the short track races are fun. I know it's not my dad's NASCAR anymore when people are going over giving hugs and apologizing. NASCAR is really growing up. Really that back in my original NASCAR days, there'd be hands thrown in the garage maybe a few different times. It might not have been so pleasant as my guess.
Well, funny you say that. Saturday in the Xfinity race, there was a wreck, and the driver got out of his car, ripped the bumper cover off his car, and threw it at the car that hit him.
Now that's the NASCAR I'm used to.
Yes. And, I was listening to an interview, and the NASCAR official's like, yeah, they're going to throw their helmet or something. We're going to let them have at it. But, they're in the middle of the traffic. That's a safety issue. We got to stop that right away.
You can't run out there. You can throw helmets and stuff, but just don't run out in front of cars. Come on here.
Yeah.
That's funny.
And so, now let's transition this from track talk to tax talk.
Well, first, before we do that, what are you drinking today? I'm reasonably corrupt. Maybe like Congress or something. Maybe like those financials that we were talking about before. Reasonably corrupt. Who knows?
Well,
that's what I'm starting with today.
I've had a long day, and I am still on the coffee.
All right. Yep. Yeah. That's a good indicator of a long day. It's 5 p.m. It's 5 o'clock somewhere, which means it's great for coffee, right?
Right.
That's what the saying's all about, I'm sure.
And
but you're right.
An hour from now, I will probably be switching, but yeah.
But for now, coffee
I had to get through the afternoon.
Well, I get it too. Like we talked about. So as a transition to tax for real, like this time of year for tax professionals is extremely, extremely challenging, and it takes a lot of effort, right? And it takes a lot of a lot of your time, right? Even just filing extensions, like that doesn't come at no charge, and that doesn't come at no effort, right? It isn't just a box you click. There's work that has to be done around that, and so it's a really busy time. And so it can be a time where coffee becomes really, really valuable no matter what time of day it is. Absolutely. And so
you mentioned those extensions, and there is a huge disconnect there. People are like, well, I've extended, I'm good. Well, you've extended the filing of your return. You actually haven't extended the payment of that said return. So, there's still a lot that goes into that extension time for us.
Right, and I was going to bring that up later, but we can talk about it now. Is when you're filing an extension, the thing that you're extending, like you're talking about, is the deadline to file your return. Yep. But that means that you may still need to make a payment, and if you need to make a payment, you need to know what the payment might be.
Right.
Which means that you need to have like a rough idea of what your tax return is going to look like, and so because of that.
Well, there's a couple things at play there. So we do have something that we do know. We know what you paid in tax last year.
Right.
Or what your tax liability was last year.
Sure.
Not necessarily what you paid. And so the rule is you should be making estimated payments throughout the year, usually 4 equal payments, the last one in January. And it's got to be at least 90% of the tax you owe in the current year or 100% of the tax liability from the prior year. We know what your tax liability is, and we give you coupons or vouchers to make those payments. It's okay, did you make those payments, and where that lies. And and the other factor there is you have to pay 110% of what you pay or what your liability was the prior year if your income was $75,000, $150,000 married. So they even make that a little more difficult than it needs to be.
Yeah, or at least a little punitive, right? That becomes that can become a challenge. So you do have a rough idea of at least the minimum of what you have to pay for sure.
Right.
But there's
And Christy loves your drink of choice today.
I know,
Love
reasonably
it.
corrupt.
Yes.
Thank you. Thanks, Beer Drop. Shout out to Beer Drop. That's a Beer Drop one. I got the new Beer Drop yesterday, actually. So that's the first of a few different ones from them for this go around.
Yeah.
So we got to talking about taxes at the end of last week, right? Because I had the realization as a regular, a non-tax professional, that if I did not want to extend my return, I needed to do my taxes. That deadline is the 15th, so that's not this upcoming Monday, but the following. And it's the deadline for individual taxpayers and 1120s. Is that right?
C corps. Yep.
Yeah. All right. And so regular C corp filing. So that's I was like, oh my gosh, I need to do that. I need to take care of it. And I mentioned to you, like, over the past few years, I've had some challenges in doing that because while I am a CPA, I do not specialize in tax. It's not something that I have ever done really outside of my own. Like, I understand what a tax return is. I understand the underlying accounting, but I don't do them. And so it's always an experience.
Right.
And so I wanted to talk a little bit about that today, because taxes do get more complicated each year, it seems like, for a lot of different reasons. Your life circumstances may change, right? We had a baby last year, which means that or 2 years ago, or oh my god, however long it's been now, in 2022, right. 2020. So last year was this return that I just did is the second time that I've included a child on my tax return. So this is just the second time that I've had to do that. So it's something new to me still, of how does this impact this? How does that credit even work? Where does it go? Right. Like, I know that I get some credit for an extra body in our household, but I didn't know right off, like, where it was going to fall. And so I did. I went through and did my taxes this past week, and it probably took me like 45 minutes, maybe an hour. So it wasn't a huge time commitment for me. But I also have 2 W-2s and a little bit of 1099 investment income, like, dividends and stuff. So our tax return is not complicated, but it still took me that long as just what I would think of as a relatively simple tax return. And especially, again, like I mentioned, as a CPA, like I couldn't read the instructions. Like, I had to Google, like, all right, where Schedule B, what do I need to, when do I have to do the Schedule B? Like, what goes on here? How much information do I need to include? Because I didn't know. And I had to do what's the baby form, the 8812, I think. So I had to do maybe some other number. Like, there's lots of forms.
Credit, yeah.
Yeah, the child credit form.
The additional child credit. Yeah.
Well, that's on the bottom of that form. That form has 3 parts. Yeah. So I ended up my tax return for just the 2 of us ended up being 4 different forms. For our stuff. And again, it took me about an hour, and I'm pretty sure that I did it right, but I'm not 100% sure, because there can be a lot of complications around it. So before we really get started in talking about that type of stuff, first I wanted to say, like, what's really due this time, right? It's personal. It's 1120, so C corps. Is there anything else to do this time?
No, that's what we got right now. And,
all right.
Yeah.
Do both of those get to extend in the same way? So if you were to file an extension, does it mean the same thing for individuals and C corps? Yeah,
I mean, it just extends. It's a 6-month extension on them. So at this point, if you extend, the filing is due on October 15th. 15th,
right? When that becomes the way that I have always heard that is that's the real tax deadline, right? Because there is no extra extension from there. Absolutely. Well, assuming that there's no emergencies or hurricanes or those types of things, that's the end of when you have to file.
Yes.
And we talked about a tax deadline a couple weeks ago, right? 3/15 was a tax deadline, and that was for the pass-through entities.
Yeah, for sure.
How do those entities, how do they connect to these ones?
Yeah, so they're called pass-through entities because the income passes through the company to the shareholders or partners in those entities.
Right. Yeah.
And those returns have in there a K1, which is the partner or shareholder's portion or pro rata profit or loss, so to speak.
Yeah.
that gets passed to the individual tax return for the owners of those pass-through entities.
And so I don't have anything like that, so I didn't have to deal with that.
Yep.
Where does that just go on the face of the 1040 K1 income?
It actually goes on page 2 of Schedule E.
All right, so there you go. So you have to add Schedule E, which is what that's the passive income one.
Schedule E is other income. You put some rentals go on there. And,
okay. So some passive stuff goes on.
Page 2 is your pass-through entities. Yeah.
Oh, right. Got it. And then if you didn't have that, right? If you didn't have that 315 filing, but you're still operating a business, how does that get captured?
Okay, so and that depends. I mean,
okay.
Let's say Chris starts his new business of collecting beer cans and recycling them.
Yes, love that business. Environmentally
and you just do
friendly.
that as yourself. You're
right.
a sole proprietor, and you would be considered a disregarded entity.
Okay.
That income would go on your 1040 on your Schedule E. I mean Schedule C. Sorry.
Okay. All right.
So and basically, if you have 3 or 4 different things, that's how it goes. Now, let's go back to that LLC you started. Or
all right.
let's just assume that, hey, this business is thriving and you start a LLC and you are the only member of that LLC.
All right.
So you are a single member LLC. And guess what? You're taxed exactly the same as you would be as if you didn't have the entity. By default.
Oh. Yeah.
By default. A single member LLC is a disregarded entity. Now, you add a partner to it, or you elect to be treated as a corporation or an S corporation, that changes it, and then you would have to do a 1065 for a partnership, 1120S for an S corp, or 1120 if you elected to be a C corp.
And so obviously that's a lot of different language. Are there typical business propositions that like lean toward each of these different options, or are there highlights that people should be aware of as they think about that, or if they ever find themselves in my business is starting to thrive, what do I do now?
Right.
Or is it just time to get a tax advisor?
Well, honestly, I would definitely say get a tax advisor, because a lot of people say, well, I'm an S corp. I'm a corp. I'm an S corp. Well, you might not be. You could be an LLC. There's a difference between the legal entity and the tax entity.
Oh,
so
okay.
You can elect to be a C corporation if you are a partnership or an LLC. You're just changing the way you're taxed into a corporation. So there's the legal requirements versus the tax requirements, and a lot of people just confuse that.
I would confuse that too, I think.
Yeah.
Even knowing what all of those things are, like, that's still a little bit confusing to me, because that means what the differences are. For one, it's like how your income is allocated to people, and the other is how that income is taxed. Are those the differences, or is it like how your ownership is, like, because if you're an LLC treated as a C corp for business purpose, like that's you're chopping that out into shares, like what?
Yes, ultimately you are.
Okay.
So yeah, I mean, basically, you're not going to be taxed on that in a pro rata portion passed through. It's going to be taxed at the entity level at that point.
Oh, okay, so that's a tax election. Got it. All right,
that's a tax election, exactly. Yep. Now,
so
that LLC has specific, and every state has different rules on what they must do to remain an active entity.
LLC, yeah,
right. And that is different than what you have to do as a corporation. And so, LLCs have membership agreements, and it basically spells out what they can do. LLCs can elect S status as well. Now, S status, you can only have one class of stock, but you can have different categories of stock. There's a lot of, you can have voting and non-voting, but you can't have different classes.
But it's all common. It's all
common, right? So, and I haven't I haven't had to deal with number of shareholders in a long time.
Oh no,
things
it's
like
fine.
that. But there are a lot of different things at play there. And,
Yeah, no.
If you are looking at an entity change, you should check with an attorney, like a corporate attorney that really knows the rules for your state.
Yeah.
I know in the past we had issues. We did a merger and a successor company and all this other stuff due to ownership issues.
Sure.
And we, as a CPA, I was able to handle the tax side of it very easily. But
Yeah.
the legal issues, it was well worth whatever we spent with that attorney.
I bet it was. So find a good tax attorney or a business structuring attorney. They'll be great help in that type of situation for sure. And also, if you have a good tax advisor, I'm sure, or a good accounting advisor as well, they probably have a network of people that they can refer you to as well in this space. So you're not out on your own. Most people are going to have some kind of network that can help you to find that kind of individual. One last question around this, because I just want to provide the clarity to the people and then also to myself, even though I'm pretty sure I've got this right. But you are the main stockholder of a C Corp. That C Corp has a filing that's due in a couple days. That C Corp is paying tax for itself because of its own income. You, as even if you were the sole shareholder of this C Corp, you're not paying any tax on that, correct? Only if the company is distributing you money. Is that correct?
Go. Yeah.
All right.
Yeah.
So if you're leaving all of your earnings in the company, then that is the only thing that's being taxed. And if you're getting income as wage from the C Corp or from something else, like you're being taxed on that. If you have some alternative investments that are generating interest or generating dividends of some other sort, then you're going to be taxed on that.
Yep.
And then if the C Corp is giving you dividends, your own C Corp is paying you dividends, you'll be taxed on those dividends.
That's the double taxation that you hear about with C Corps. And
so is that typically the biggest turnoff in C Corp status? Yeah. Okay.
Yeah.
Is there are there just at a super high level, are there any rules around the amount of wage that you can pay yourself out of a C Corp?
I don't think I'm not aware of a salary rule with C Corp.
Yeah, but you were then earning that income, right, as an individual, and you're paying the taxes that are associated with that from both your perspective as an individual and then also from the business as well. So there are some additional double taxation situations there too. Is that right?
Well,
kind of right.
I wouldn't call
Mostly
it a
right.
double taxation issue because
you're getting that deduction.
Yeah, you're getting the deduction for that from the company.
From the company side. Yeah, so it's only one.
Yeah.
But it's but okay, that's the main don't do that reason. Right. Okay, got it. Totally.
Exactly.
At a super high level, I understand that. I think. I think. All right. So again, my personal antidote around this, right? I did my taxes earlier this week in the evening. It took me about an hour, and it was a lot harder than I remembered it being last year. But it was not that bad, right? It was only an hour.
Let me ask you this: what was the opportunity cost of you doing your own tax return?
Well, so that's my biggest problem actually, and that's kind of what I was talking about last week. Is I could have maybe been doing something else, right? Maybe watching a TV show, maybe something like that. Like I could have done something like that. I could have been doing an hour worth of billable work or something, right? Like maybe,
you could have been
right? I could have been doing some other.
10K.
Huh?
You could have been dissecting a 10K and doing your.
I could have made another video on my YouTube channel. That's definitely possible. Right.
Yeah.
So yeah, that was something that I had to give up. Right. I had to give it up to do this. It was 45 minutes to an hour. It wasn't like a long time. This wasn't a huge commitment, but again, it wasn't that complicated. But I had to fill out I got qualified dividends in one of the funds that I hold, right? And so I had to fill out the slightly less tax on these dividends form, right? To get the updated tax. So I had to go figure out what my tax was regularly and then do the calculation with the less income because of the qualified dividend portion, which was maybe $200. We're talking about not a lot of stuff here,
right?
But it had an impact, right? And so and then I had to figure out, okay, like how do I fill out this tax credit form for the baby? What information do I actually have to put on the Schedule D for the like couple of shares of stock that I sold? Like, what was this? Like, how much did I have to do here? And in the end, it was a successful story for a W-4. So the W-4s turned out awesome. I am getting a $44 refund. So all of my effort, that opportunity cost, got me back $44. Huge, huge, huge time. Definitely worth it. Totally. Um, but the thing is that I have absolutely no idea if I was to go out into cyberspace or to anywhere really, like how much that would have cost. Mm-hmm. And so I truly don't know, like I understand what the opportunity cost was for me, right? Because I could have been doing something else, but I don't know that I understand like what it would have cost otherwise. So the rest of the opportunity cost, which I think, and we talked about a little bit last week, is a challenge in the entity, or in the
industry.
Industry, yes, in the industry environment, like of just generally like what does it cost,
right?
And so one thing that I definitely wanted to like talk about, right? Because my return easy. I'm a CPA, so I'm like theoretically qualified to do it too. Theoretically, like what happens when it gets more complicated? What, like, let's say you do have two K1s and you run your own business too. Maybe you have some roll up as well, right? So you have two K1 entities and one disregarded entity. Like that doesn't sound like a lot, but that is a lot of complexity. And so what does that mean for a tax professional? Like, how do you even gauge what's expected? Like, how do you know how long that's going to take, and how can we deliver like information to our clients of what to expect when they have situations like this?
Well, from our perspective, the biggest point is going through the organizer and deciphering all the details, and then going through all of the documents we've received from the client. Now, we do that, and if it's a continuing a client where we've done the return the prior year, we're matching that information up to what we got last year, and then pinging the client, hey, we had this W-2 last year or this K-1 last year. We didn't get it this year. And then you have a back and forth. I divested of that. That should have been a final last year, or I had another job, or something along those lines. It takes time to get all that information, and you have to go back and forth to get it. And there's things that we just don't know. I can tell you, after doing this for so many years, that clients don't like completing the organizer.
Right.
And we don't have all the information we need. The best thing we can do is have relationships with our clients and know, and from conversations that we're having with them, oh, hey, this changed, or hey, I started a new investment account at Schwab or something. Where their stuff is, so that when you're going through it, you can say, oh, got it, perfect. And then you knock it in there. Now, you asked how long does it take? Well, the first year of doing a tax return probably takes 3 times as long as doing it in successive years.
Yeah, okay.
Because we're getting all that stuff in that tax return. We're not familiar with the client. We have to know all these other things about them. And, that gets us to the next year. We roll that return over. So all that base information's in there. If they had another child, well, we got to add that in. If there were other life events, we got to take care of that. But ultimately, you've rolled that over, and it's, hey, we're expecting these 2 W-2s, this K-1, and these dividend statements. Right. Get all that in there and say, oh, wow, there's 16 more left over here. We did a lot of investing this year, or something along those lines.
Sure.
And, and sometimes you deliver the return and you're meeting with the client and say, oh, you don't have my rental home in there or my Airbnb. Or hey, I started driving Uber this year, and here's my 1099 I forgot to give you. Okay, that's great. Now, where are all the expenses for all of that information? And so there's so much to it, and it's the best part of what we do is having the conversations with our clients. At least quarterly, trying to do that and understand what their tax situation's like, and we'll make those requests throughout the year so we know what's going on and put it into our tax planning software. So we can kind of get an idea of where they are at the end of the year. So when we are sitting right here, we're not sitting there with a stare in our eye saying, I don't know what you owe. It's more like, based on history or based on your history, we expect in the fourth quarter this is going to happen. And, based on this information, we think you're going to owe X. You made these payments. I suggest you make this last estimate in January. And there you go. So there's so much that goes into it.
Of course. And so it can be really... It can be really complicated or it can be really easy.
Right.
Yeah, right, exactly.
And then the other side of that is we're still trying to get engagement letters signed.
Yeah, that can be a big problem too, right?
We've had a number of engagement letters expire twice already.
Yeah, that's never fun.
And now we're trying to get those back out and signed.
That is a pro of doing it yourself, right? I don't have to engage myself. I just did it. But that brings up a couple of interesting things, at least for me, right? The first one is, like, would it have been really valuable for me to have utilized tax software? Like, if I knew how to use one, like, should I have just tried to bum off the firm software or something like that? Would that have been way easier? Because I had to do a bunch of calculations in Excel. Would it have taken me, a third of the time just from using some better tool?
Well, for you to do that, you would have had to have learned the tool.
Right, sure.
And all the navigation. So it probably would have taken twice as long as anybody else to do the first year return. And if I recall, you're not using a packaged software. You're using the IRS free file, correct?
That's right. Yeah, no, I absolutely. So I went to irs.gov and I clicked around on file your forms for free or whatever. And it takes you to, I think it's Free File Forms is the name of the main one. And that's the one I've used for the past few years. So I went to Free File Forms, whatever, freefileforms.com, freefileforms.gov, whatever it is. And so it starts with 1040 and you start populating it with your own information, right? So I put my name in, put my wife's name in, put my daughter's name in.
So do you does it carry over any information year to year for you?
It did not carry over any information. Okay. There's not a lot of information to carry over, truly, because it's just names and socials, because everything else would be stuff you'd have to input anyway, because it's going to change. But yeah, no, it knows nothing, which is kind of nice because it means that I'm sure that this is actually not true, but my information's not out there somewhere. But it's not as out there as it could be by just being log-inable. Because you do have to log in a new time. You have to create a new login every year. Gotcha. So yeah, no, none of that information carried forward. I don't know my daughter's social security number. So the first time I put it in, I saved the tab because you can just save your progress there. Gotcha. But it erased her because there was no social. So it just erased her. So I did have to input her again, which was really annoying. And currently I have not filed yet, but in the version that I have currently, her social is 1, 2, 3, 4, 5, 6, 7, 8, 9, which I think is wrong. Pretty sure is wrong. But I will double check that before I actually do file. So yeah, there's drawbacks to that too, right? And then again, you have to select the forms that you need to add, and then it doesn't tell you that you need to add them. Like I had to when you get to the box for interest and dividends, I had to add the schedules D or B or whatever. I had to add that,
right? And
then I had to fill that form out using the 1099 divs and ints that I got from the relevant institutions. And ours was easy too because I used standard deduction. So I didn't do all the stuff that would go into itemizing either, which would have probably taken like a million minutes more, I'm sure. So yeah, no, I just used the form that's available online. no software at all, and had to input it all and have to do every single year. So there would be a lot of value, I think, in not doing that anymore.
So I do have a question. When it came to doing your W-2s, did you just add up your W-2s and pop that amount in the W-2 line on the 1040?
I have an Excel file, one column for my wife, one column for myself, and one column for our combined accounts.
Okay.
Where I take her W-2 income and my W-2 income, and I add them across.
Okay.
And then I have a sum if for, because we have a few different brokerage accounts, not loads of money or anything, but we just we like to segregate. My wife is a very good planner. She likes to segregate things based on what our intention is with the funds. So we have a long-term investment pool, we have an entertainment pool, and we have a we're going to pay this right now pool, like our mortgage and stuff. So we have a variety of different accounts, and because of that, I get 1099 divs for every single one of them, or 1099 ins for every single one of them. So I have to include all of that information. I include that for each category. We had some of them had, and actually this is a thing that I know is wrong. So I'm 100% sure that my tax return is wrong, because I had section 199 something or another's on that form, and I don't know where that goes. And the form doesn't ask. As far as I know, so I actually have no idea how that's handled. And I'm sure that it's wrong, and it's like probably $20 or something, but it's something.
Yeah. So the difference between that and what we use, we put that in and we calculate the return. It's going to say, hey, you're missing this.
Oh, see, that would be handy.
Yeah. But yeah. And from the differences there between what we're using and what the public would use, like let's say a TurboTax or Block or something like that.
Yeah,
they're going to take you through an interview process, and it's going to take.
Yeah,
it takes a while to go through that all.
Yeah, I used to use TurboTax several years ago. The firm that I worked with before, they threw in the basic package for free, and so I used TurboTax those years. And it did at least know who you were. So that was a positive. And then it goes through, tell me about your income. What about this kind of income? What about this kind of income? And this other kind of income? Right. And it asks you about every single thing that you could potentially end up with on a 1040. And then it says, well, what states were you in? Did you work in all of those states? Did you work in more states than this? And then how much did you withhold, and all of the stuff that goes along with that, right? And it asks you every single question. It's like a very comprehensive organizer, but that doesn't do the things that you're talking about of having already known, oh yes, we had a baby this year, or our baby is now 21 and we can no longer claim them as a dependent because they are living their own life now. Right. That
right.
TurboTax doesn't do that for you.
Right. But what I've noticed is people come out of that interview, they're like, it asked me so many questions. I don't think I got anything right. It frazzles them. There's so much coming at them at once.
Yeah, and I can imagine that would be the case for anybody who doesn't know exactly what those things mean already.
Right.
Because again, I was a CPA, right? I knew, okay, it's asking me this because I need to put that in a thing, right? Okay, I know what this thing is, but that's because I know what that thing is. If you don't know what it is, it's just some random question of hey, did you get a 1099? And you're like, a 1099? I don't even know what that is. And so it can be really, really, really complicated if you don't know what's going on in it, and certainly if you haven't had any exposure or experience with it before, it can be very, very challenging.
I don't remember if I mentioned this last week, but I mean, last Friday I had a friend pinging me about TurboTax questions, and I don't know how to tell them. Yes, I'm a CPA. I don't know TurboTax. I cannot help you with it. And it continued yesterday and the day before yesterday.
Oh my goodness! Yeah, blowing up.
It's you know what? I've spent more time answering your questions than it would have taken me to do your books and your tax return at this point.
Right. And what was the opportunity cost to you, Jay? Should this person have paid you a couple $100 for that time of yours and had you do their return?
Possibly.
Yeah, possibly, right?
But I'm also at the point in my time where it's I'm I'm on calls most of the day. I left it unread for most of the day just because I didn't have the time to deal with it.
Yeah. Yeah, I think Christy's right here too. Like, if people don't know what it means, they just assume like, oh, I didn't have that,
Right.
And that can be a really, really bad assumption, because it can come back to bite you when it's not true.
Well, and some people, they don't check their mail. They're not looking for the forms coming in. You know,
1099.
They end up in the trash can. And
or the inbox.
I was going to go somewhere else with the trash can comment there too, but that's the good thing about extending your return, because it gets the IRS time to process all those documents that they have on you, and then you can log into your account and get a transcript of everything that they have.
Yeah,
and that's the way to audit proof yourself, because they have your W-2, they have your retirement statements. They have your mortgage interest. They know all of that.
Yeah.
So
sometimes that time can be a really good thing then.
For sure. People I truly don't want to extend because it's going to increase my likelihood of getting an audit.
But that isn't
not going to happen.
No.
Using TurboTax might, but using a professional, much less chance. So.
Much less chance.
Yes.
So I as we were talking through this, it reminded me too, like, it wasn't that long ago that you actually had to file your own tax returns, right? They ended up being due in February because of hurricane relief stuff, right?
Yeah.
And so it made me think about this. Like, Jay, how long did it take you to do your own?
18 months. No. I had to, do a little bit of accounting on my business side.
Yeah.
And my Schedule C. I mean, I got a couple Schedule C's I had to deal with. So, it took me a couple hours.
Right.
But yeah, and
as a professional, it took you a couple hours. Can you imagine what it would have, what silliness it would be like for a business owner to try to navigate this by themselves? It's just a bad strategy.
It's like everything else when we talk to our clients. It's like, do the things that you do best. Delegate everything else.
Absolutely.
And the cost of doing your own taxes could be great, much greater than what you're paying to have it done if you're doing it yourself, because you might miss something. You might. Here's a great one. I knew somebody that used TurboTax for their business and never put any of their assets in.
Oh.
So they didn't get any depreciation expense.
Yeah. Whoops.
So I mean, it costs them in the long run.
Yeah, no question. Yeah, that can be a huge miss. That can go a really long way.
Yep.
Because especially if if your business is very profitable, if those expenses offset that income and directly, so that can be a big advantage to you. So it is really important to have a good understanding of exactly what's going on, and then especially once you get past that level of like super basic situation, right?
Yep.
It's time to involve a professional. Absolutely. I don't think that there's any question to that. Now, one of the things that you mentioned was like delegating things that you're not skilled at, right? And so that's what we're advising business owners to do. One thing that I would definitely love to delegate is ever talking to the IRS. And so I know that the IRS has caused lots of different kinds of issues for tax professionals and our clients.
Sure.
What do you have some good stories around issues that come up from the IRS? What can you talk about that a little bit?
For sure. Now, a couple years ago, it took an act of Congress to get through. Literally, yes. You'd call. And this is a true story. You call and it'd say you had a 30 to 60 minute wait to speak to somebody. And you're sitting there on your phone. It's at 59 minutes, 59 seconds, 60, 60 minutes, 1 second, 2 seconds, click.
Oh, no, just disconnected.
Oh, no. You call back and then you get, oh, we're sorry. We have a higher than normal call volume. Please call back tomorrow.
Oh, no.
So, that was what we were used to.
Yeah.
And, we hear that they're making investments in the IRS. They got an 80 million or $80 billion.
An act of Congress.
Yes, they did pass a bill to give them more funds. And I will say that they have done some technological upgrades that have been really, really helpful.
That's great.
And, we've always had Where's My Refund? We now have a Where's My Amended Refund? We have the Tax Pro portal, the Taxpayers portal. We can access our individual tax clients' portals through our tax portal.
Oh, yeah.
Still can't access business information, but if I have a power of attorney on file, I can log in and get information from my clients from the portal. So it's been really, really helpful. Now, this week I had 3 opportunities to call the IRS. And
what a gift.
Very much so. And earlier this week, I did not get through. I got the dreaded, we are busier than normal, call back tomorrow.
Wow.
So I called back yesterday. And as a licensed CPA and a tax provider, we have our own line. So we are
practitioner
talking to people
hotline.
that know. We have the practitioner priority line, and they know that we are skilled and we know what we're talking about. You would expect them to put the best people there, and in some cases they are, and sometimes they're right out of the training class. And I will say, yesterday, you press 1 for a question, press 2 for an individual, 3 for a business. It's like right now, it's okay. Just hit 3, and it says, we're transferring your call. We didn't even get you have a 2-minute wait. I mean,
oh yeah, just right on in.
Mid ding, it cut off and they answered, and they were talking.
Wow, yeah, that's great.
And basically, I sent them a 2848, which is the IRS power of attorney. And yes, I have to fax it to them. And you have to get, and they won't just give you the fax number so they can get it, and they can be vetting all the information you have for them while we're waiting for it to go. But no, we have to give them the business, the EIN, our information, our CAF number, which is the central filing number.
Yeah, that helps to associate you with that file, right?
And then we have to validate ourselves, and then they will give us the fax number. And then they say, please give us 5 to 7 minutes while we wait for that fax. Yeah. So it's like, okay, we're now 15 minutes in, and we haven't gotten anything done yet.
You literally just now know that it's actually my client, and it's okay to talk to me.
Right.
Oy.
And now they have the document. Okay, what's up? Well, we never got to that because the agent I spoke to yesterday rejected the 2848 because it was missing something.
Oh, no.
It wasn't missing anything. She didn't like the way the address looked.
Oh, no.
So, okay, no problem. Here's my other issue. And I had to go through the same thing. I had to fax the power of attorney separately. The only thing we didn't have to do is validate myself because we've already done that once.
Yep, right.
So we sent it, and that got taken care of. So 45 minutes on talking to somebody, and we got one issue taken care of. So I'm like, all right. I took my daughter for a lab test this morning, and I was home by 7. By 7:05, I was on the line with the IRS.
There you go.
Again, did not ring. They picked up.
That's amazing.
Yeah. So that is great.
80 million success right there.
Yes, for sure. And so same thing. I sent the same POA I had yesterday. And I didn't resolve the issue. But it's so.
But you got to talk about it at least this time.
Yeah, we got to talk about it, and
there you go.
So, this is one of those weird ones. So, I had a client come to me in 2020. We filed her 2019 tax return, and we elected S status. We faxed in the 2553, which is the S election form.
Okay.
And we e-filed the return with a copy of the 2553 attached. And it was accepted by the IRS.
Perfect.
Right.
You would think.
Yes. 2020, we had to paper file the extension.
Ugh.
And then the 1120 was rejected. We had to paper file that. Okay.
Eee.
So I'm talking to the agent before I went back and got all that history. I'm talking to
Yeah.
the agent, and she's like, "Well, it got rejected because it's a C corp. It's an 1120, and we don't show anything in their file. We don't show any returns being filed." Yeah. So at that point, I'm like, all right, I don't have all the records with me. Some of it was pre-acquisition, so I had to go back into the digital CPA archives to find some of the things.
Right.
And go back through old emails and go into the software and find last year's return. So I said, okay, no problem. I will call back. Well, immediately I found 2019's information. Actually, I still have the email up here coming from CCH telling me that it was accepted with the submission number.
All right,
I have the
there you go. That's
21 information where it was accepted. I have the 22 information where it was accepted. So
you're going to try again on Monday.
I'm going to have to call back again, give them all that information, and let them figure it out. And
you'll have to go through that same exact process, right? You're going to have to talk to the agent.
Yes.
You're going to have to hope that they approve your POA.
Right.
And then you'll be able to explain everything because I'm guessing there's not a good record of it.
They actually, when you get the agent and they accept your power of attorney, the 2848, they will then send it to the CAF unit for you. But it can take 15 to 25 days for them to process it.
Oh. Wow.
Now, we can now upload them. There is an upload tool for them, but it still takes a week to get it processed.
Yeah.
So, yeah.
Yuck.
So, yeah, I'm going to have to go through that whole thing again. And I was talking to our boss, Liz, earlier about that. And she's like, yeah, they have, I can't remember the term she called it. They have like this missing database of mismatched files. You know, it's kind of like Area 51 of tax returns.
Is this the thing they set on fire in Utah a couple years ago?
No, it's funny you should say that, and kind of like the thumbnail that I created there. So I was talking to the international department, which is based in Utah.
Okay.
And I had submitted a document 3 times. Once through the document upload portal, which is part of that new technology that all of the reps know about. And then I called about that, and they're like, yeah, we don't see any of that. We think you're full of crap and whatever. I said, well, here's my email. They came back and said, thank you for your submission. And they're like, yeah, no, there's nothing there. So did that. I mailed it. Still ain't seen it. And on my last call to them, they're like, yeah, we had such a backlog. They purged a lot of that mail. I mean, really? Purged, right. And you know, yet those automatic collection letters are still coming out every month.
Yeah, that is disappointing. But definitely a thing. So those automatic collection letters are also an issue that the IRS can cause, I'm assuming, right? Like, because it anytime that a client receives a letter from the IRS, it is nerve-inducing, like, understandably. Yes. You know, and sometimes the IRS uses very aggressive language. If you don't respond to this very quickly, we're going to place a lien on everything that you own, and it will all be ours. And
funny you should say that. This is a letter addressed to one of my LLCs.
All right.
Which is a disregarded entity. And it is a notice of intent to seize, levy your property or rights to property.
Uh-oh. Disregarded, though.
Huh?
Disregarded, though.
Oh, it's a disregarded entity. I can't disregard the letter.
No. Sorry. That wasn't what I meant. Yeah. So, but it's a disregarded entity. So So it's really to you.
Well, I mean, it is me, but
yeah.
So basically, there is a rule that says if you are a disregarded entity and you file a Schedule C, if you hire your child 17 or younger, there is no payroll tax.
Oh, okay.
Right. So my daughter has been getting about $12,000 a year through one of my businesses, and
working really hard.
Yeah, it's been paying some dance tuition bills for her, and you know, the other side of that is, and I haven't really approached it, but I believe you can probably set up retirement funding through that as well. Haven't done it. She's now going to be 18, so that's all in the past. But you know, I use a payroll service that submits the 941. The IRS sees the 941, and
like,
sends
no
me a
money on
letter
here.
and says, "Hey, you forgot to compute your FICA and Medicare tax," and that's what that is. And I've already sent them a letter about this regarding 2021, and they only applied it to one portion of 2021. They left one quarter open, and then they now have it for a quarter in 23. So now I have to go through it all over again.
Yeah.
So,
Yuck.
Yeah. So fun stuff.
Yeah, or not that fun. Right. Issues.
For sure.
And speaking of not that fun, another thing that can definitely not be very fun is waiting on Congress to make moves, right? So Congress can cause issues too.
Right.
And this year they might, but like we've talked about, like they're probably not going to.
Right.
But in the past they have, because when they're passing these laws in the last minute or the after the last minute, now there are new rules that apply.
Right.
And so because of that, significant issues can come up for tax preparers and for tax filers, because now the rules changed and they're different than they were before. Are there other issues that come out of that, or what are some of the things that you've seen in that space?
Well, when they do that, there's so much ambiguity about it. And you know, what the message was at the beginning of this tax year was, don't file, wait. We're passing a law, don't file. And, well, it wasn't really the IRS saying that. It was everybody else. The IRS is like, no, file. Let us process it.
We want that money, man.
And then,
we're going to need that cash.
Well, yeah. But, we will know, we're going to build these things into our system, and we'll know which returns didn't have it, and we'll automatically process it for you. So, it's... And
that's what happened a couple years ago, right?
Right. It's exactly what happened a couple years ago, and it actually worked. Now, all of this, I want to call it TikTok tax advice. Don't file or file, whatever, or that card I had, get your $9,000 now. It's misleading, and that's a big part of it. It's like, who do you listen to? And listen.
Well, especially when it changes, right? Because both of those things may have been factual at one point in time,
correct?
But only one of them is right now,
right?
And so I think I probably mentioned this at the very beginning, is that this is back in January, it would be very powerful for Congress to move quickly, so that if there are issues, they can be resolved. And at this point, I think that we would both agree, it is actually just better for them to do nothing,
right?
Because it would just cause so much more confusion at this point that it would not be worth it. But it wouldn't surprise me either that they pass something next Friday, and and all of a sudden, all of the hard work that went into everything is just scrapped because everyone needs to do it all again.
No,
that wouldn't be a huge.
Honestly, the changes that they were making in January that the House passed.
Yeah.
Now, we have not discussed any of that.
Right, because it hasn't. It's just half a thing,
yet.
Right?
And the House might pass it. The Senate might pass a completely different bill, and then they have to reconcile. So there's no sense breaking it down until we know the truth.
Right. Exactly.
Now, what the House passed was retroactive to last year, and
which means it would have
that it was reverting the bonus depreciation back to 100%. Whereas it was
which would be really valuable for
last year. And that would have been a big deal for companies in December to, not only to buy new equipment to get that deduction, but for those manufacturers that are selling that equipment. Yeah,
it would have been a big stimulus item. I think that was the original thought behind that aspect of was this TCJA or was this before TCJA?
It was before TCJA. Yeah.
Yeah, because this came out of long ago, because it was in the 2009 recession, I think, is when this law was originally
established it at that period. They just extended it and then and then put the cliff on it where it would start going away.
Right, and so the original reason that this law got put into place in the first place was to stimulate economic activity at that point in time, because you got this 100% deduction for assets that you placed in service. And so it incentivized companies to spend the money now, because you would get the tax benefit of it now, which was always kicking the can.
Right.
because you're like juicing the economy shortly, where at some point in time it's eventually going to have to go away, or you're just going to have it be there forever. And so there is always, or was always, going to be some cliff there, right? And so now we're kind of at that point,
Right.
but not knowing it does like pause all of the decision making around that, because
Right.
you have that uncertainty, which means that you don't know, like, should I invest now or should I invest in 6 months when Congress might make a different type of decision,
Right.
and now it becomes more valuable for me to do it. And so yeah, that can definitely be a significant problem.
But
And
you're just
now,
looking at that from the purchaser standpoint. Think about that from the manufacturer who's manufacturing
yeah.
that equipment that you're buying.
Well, and it
You
goes back
know?
to all the stuff we talked about just yesterday, right? Or
Yeah.
last week, right?
Right.
Like,
Yeah,
if you
exactly.
don't know what your demand is going to be,
Yeah.
you're now like lost all your lead time planning, all of your like everything around your supply chain
Right.
management, everything around your inventory management. If you don't know what's going on, then you can't project properly. And so, yeah, it can be a huge thing on both sides, both the purchasing side and the purchasing from side.
Exactly.
Yeah.
You know,
And so,
and one other tidbit from going back to last week's conversation and
yeah,
the port in Baltimore, they've now stated it's going to take 2 months to get that port open.
2 months, yeah.
2 months. The Army Corps of Engineers is saying it won't be to the end of May till that opens up. So
Wow,
that is a huge cost to other
Yeah.
companies. It's a huge cost to the port of Baltimore, to the people of Baltimore. You know,
Right.
there are jobs at stake there. So, you know, it's going to affect a lot of people.
Right, and so that impact is just like continuing, right? Obviously,
Right. Exactly.
it impacts like commuting pretty immediately,
Right.
but the like ramifications are so much more broad.
Right.
And
Now, and I believe that a lot of those ships are moving to Norfolk, which isn't
Yeah.
that far. So some of the dock workers might, you know, make a trip over there and
yeah,
do some contract work there. You know,
yeah. But it's the
hoping
same thing
they
that you
make
talked
that
about before. And I think you mentioned this last week too. Is Baltimore is in Maryland,
Right.
Norfolk is in Virginia. The
Right.
rules can be very different around what these different ports are allowing, what the costs are
Right.
associated with that. Like there can be very significant differences. There likely was some reason that people were porting in Baltimore. Like there's probably a reason why they wanted to go there. They may be closer to their facilities. It may be closer
Yeah.
to their warehouses. It may be closer to anything, or it may just be cheaper. There's all kinds of different reasons.
Right.
So there's a lot of different, a lot of impacts from
Most definitely.
one singular event for sure.
Right.
Now I know we've talked for a really long time today, Jay, but I had one more thing that I wanted to talk about.
Go for it.
We talk, the IRS can cause us issues. Congress, by being inactive or by being active, can cause us issues. But also, especially as tax advisors or tax preparers, like our clients can cause us issues too.
Sure.
Like what kinds of issues can our clients cause us?
Delays. That's the
Delays.
biggest thing we deal with is delays.
Yeah.
You know, getting us their books, getting us the documents, giving us access to the documents.
Yeah.
You know, waiting for the 8879 to be signed at the last minute. You know, waiting for those. That's my favorite. And,
Everything's been done, and you're just waiting on one signature on one document, and then you can process everything.
Yep, exactly.
But then you're just waiting.
Yeah.
Yeah.
That's the biggest thing from the client standpoint.
Yeah, is timing. Well, all right. So I'm sure we can talk about that more in the future. I don't want to continue to we don't need to talk about it forever today. So last thoughts related to taxes. What things should people look out for? What, as you're doing your taxes, if you haven't done them already, or if you're working with your tax professional, like what are the things that you should look out for? What are the like last minute tips to be aware of, or anything like that?
Well, I think that the amount of people that are itemizing today is lower based on how it was set up for the TCGA. And, you know, I would definitely, you know, if you're having a lot of medical expenses, pull those and see what that's going to be. It might put you over the limit there and allow you to get that little bit extra of a deduction.
Yeah, sure.
That's one of the things there. It just depends on, you know, where you are.
Yeah.
whether you had a surgery or something or a major thing in your life, use it. It's a horrible thing to go through it, but use it to your advantage in this
Yeah,
situation.
but if you had to go through that, you might as well take advantage of this.
Exactly. The other thing is take advantage of retirement savings. You still have time to do that if you are just have a W-2 and you're not in a 401k. You can go and fund a traditional or a Roth IRA. I would talk to your financial advisor about what is best for you, but you have time to do that. And I believe you have time to do that until even if you've extended through the time you file.
So is that right? I didn't realize. Sure. I always kind of thought it was at that 4/15 deadline, but if you extend, you may have some.
It could be all right. The fact that it's a work thing that you can extend it like a SEP or something like that.
Sure.
But
rules.
Actually talk to your financial advisor. That's the most important thing at this point.
Yeah, and you still have time to do it. That's what's most important. So even if the deadline is 4/15 for that, it's not 4/15 yet. You still have an opportunity to do that.
Exactly.
So
I mean, go on your favorite financial banker's website. Fidelity is a great one for that. They have a lot of information. Schwab does as well. So check that out if you don't have a financial advisor and find out what you can do there.
Yep. Wonderful. Yeah. Well, I think that's great advice, and I think this was a great conversation around that. So, Jay.
Yes, sir.
What's happening next week?
Next week, it is the deadline week. Yeah.
No, it's Eclipse week.
Well, that too. Totality, yes. And I mean, did you see the report? And actually, it's not the report; it's the graph or the image of the path. Every Airbnb in that path is booked 100%.
Oh, I believe that's true. Yeah. So my wife and I had a townhouse in the downtown Dallas area, and we Airbnb'd out of it. And I kind of think like we've been in this house for 2 years, but I think we could have maybe made it back in just this week's worth of rent, maybe because everything around here is out of control because we will get several minutes of totality. I wish that it was like today or tomorrow or Sunday instead of Monday because it has been clear skies for like a week now.
Right.
And on Monday it's supposed to be like 50% cloud cover.
Oh, that
sucks. Yeah.
So are you prepared? Did you get your glasses?
Oh yeah. Oh man, long ago. So you don't know who you're talking to, I guess. I am a big space guy. Kayla and I, we went to Kansas City in 2017 when the last one of these happened. And we drove like 30 to 45 minutes, maybe an hour outside of Kansas City the morning of to get to where the weather was supposed to be just a pinch better. So I'm monitoring the weather very, very closely to see if we're going to have any kind of flexibility. Every time I look, the rain showers that are supposed to happen are getting a little bit later in the day and a little bit later in the day. And
well, if you need some models and you want to run them, let me know because the hurricane predictions are out, so I'm getting those models ready. It's coming.
Yeah, so I'm hopeful. Right now, it's projected to be 50% cloud cover right now around the time of totality. In the area of our house, we bought our glasses a couple months ago because we wanted to be well prepared, and sure. And we even talked about like hosting a little party. But then when I started talking to my friends, they're like, "It's a Monday, like get out of here. We're doing work, man. What the hell?" So it reminded me of how grateful I am for a little bit of flexibility around my job work, and the ability to be able to take like a half day to enjoy something that I find really special. Sure. So I'm really looking forward to it. I read an article earlier today by Bill Nye, where somebody in Austin was talking to Bill Nye, and they were talking about how the sun's still going to go away. It's still kind of nice, right? It's going to be good. Like don't worry about it. It's going to be okay. So I was always a little space nerd as a kid. I remember in my elementary school, I read every single book about space to the point where like there weren't any left. I had to go to the local public library instead, because it's just something that's always fascinated me. And this particular thing, they're rare. the next one's not supposed to happen in the United States until like 2040 or 2045 or something like that. So it's going to be a while before it happens again. And so it's going to be special. I'm really, really excited for it. That's definitely the biggest thing that's on my like short-term outlook for sure. What about this weekend, Jay? Where are you doing anything this weekend? You said Martinsville, right?
Martinsville. Well, actually, I would have checked. They might be running trucks tonight.
Oh, is that right?
Yeah, sorry. I got it all recording anyway, so it's all good.
Sure.
Tomorrow morning, got to be at the dance studio. We are getting the band back together. We are getting ready for the recital season. We have our recital and dress rehearsal coming up in May. And I've been the technology and concession chair. And I've been trying for 2 years to pass that along. And,
unsuccessfully, clearly.
Yeah. And
you got to make it look really fun, Jay. You got to be out there just having the best of times. Hey, look at all these great popcorns and hot dogs, and look at this lighting. How fun this is!
It was great. I opened up Shopify last year and said, "Wow, we made triple what we did the year before." I mean, it was great.
There you go.
So it is fun, but it's a lot of work. And
there's no question. Yeah.
And this year, I'm deeper into client work, so it's a little more
challenging,
problematic for me.
Yeah.
But if I don't train somebody, I won't be around next year because Abby's a senior. So
there you go.
Somebody's got to step. We have somebody to do the concession stand itself. I need somebody to learn how to use Shopify and the POS. Because we run the hair and the makeup appointments through there, the flowers through there, and
oh my goodness, I didn't realize it was so robust.
We run the concession stands. We got 2 registers and another one down in the dressing room, and it's going. It's a full-on business,
There you go. That's fantastic.
And then I'm gonna meet a couple of my dance dad buddies. We're going golfing tomorrow afternoon.
There you go. That's a great time. That is a great time. I will probably be doing nothing, but again, the weather is supposed to be fantastic. So my wife, one of her good friends that is in Arizona, is coming to town this weekend. She had family in town, and then it's eclipse time, so she's coming in for both those things. So we're going to do something with her friend, and then try to be outside as much as possible. This is the best time of year to be in Texas because the weather is wonderful. It's 86 and sunny right now, so that can't get much better than that. Gonna go enjoy it this afternoon. Gonna enjoy it all weekend.
76 and sunny.
See, you're right. 76 and sunny is a winner over 86 and sunny,
no,
but they're pretty comparable.
Yeah,
pretty comparable.
It's comparable. But as you're aware, because yesterday I took the top off my Jeep.
Yep.
So the next 3 days, I mean, just going to be awesome driving around with the top off.
76 and sunny. Let's go.
Loving it.
It's the time to enjoy it. Absolutely. Absolutely. I think that's a perfect place to end, Jay. This has been a wonderful discussion. Thank you, everyone, for joining us today. It's been a pleasure to talk to you about taxes, and I'm sure next week we'll come up with something that's hopefully not tax related, but might be because it might still be on the brains.
Right, exactly.
So we'll see where we get to, but thanks for chatting, Jay. Thanks for watching, everyone. We'll chat with you soon.
Have a great weekend, everybody.
Bye.
We are out.